Hey, hello there, it's the Ignorant Entrepreneur. JPM Coin debuts marks start of blockchain's value-driven adoption cycle. That's right, on the heels of PayPal announcing its decision to enter the crypto sector early next year, Bitcoin has continued its strong performance and has been hovering around the 13,500 mark for nearly a week now. In this regard, the payment giant's foray into the crypto market has been hailed as a game changer, especially when it comes to improving the mainstream perception of the digital asset industry as a whole. Not only that, JP Morgan Chase announced that its native digital currency offering, the JPM Coin, has finally been deployed for mainstream use by one of the firm's technical associates. The token is designed to facilitate JP Morgan Chase's various cross-border monetary transactions. The origins of the JPM coin can be traced back to early 2019 when the banking giant announced its plans to release a dollar-backed cryptocurrency that would eventually be used to process its internal and international transfers. Now JP Morgan seemed to have finally delivered on that promise of building a solution that could potentially save the global finance industry hundreds of millions of dollars and its peripheral costs such as processing charges, high tax fees, and more. As things stand, JP Morgan is one of the largest players operating within the global payments landscape, with the firm reportedly facilitating transfers in excess of $6 trillion across more than 100 countries on a daily basis. The move will most likely fail to have any sort of major impact on the market, especially since JP Morgan's payment network is sealed off from those not working with them. Consumers likely won't even be aware of them. It'll show up perhaps as reduced fees to move money between accounts or other kinds of trades, etc. Professional traders may notice that they have these new kinds of assets available in their portfolios in the form of these stable coins, but they're not really investments, so much more as convenient ways to move money, says Brian Bellendorf, executive director at Hyperledger, an enterprise-grade permission blockchain framework. Bellendorf did concede that by and large, the move does represent an additional step toward the mainstream adoption of cryptocurrency and technology that is now ready for prime time industrialized use. With a centralized token being deployed, it stands to reason that blockchain technology is finally ready to generate some serious return for its users. Paul Brody, principal and global innovation leader for blockchain technology at Ernst & Young, told Cointelegraph that even though people may be just beginning to realize the financial potential of this technology, blockchain has quietly been generating substantial value for many companies over the last few years. Additionally, Brody believes that trusted payments for enterprise users from big brand name banks will have a positive impact on the market at large because much of the work being done on-chain so far is operational, but payments are still being completed off-chain. The market for global cross-border payments has not had much competition until recently, so I think the addition of new players, regardless of their technology, will have a positive impact. What does matter a great deal is that for B2B payments, if you can make payments a part of a fully digital business contract, you can hugely reduce the cost of running a cross-border deal for enterprises, and that is quite revolutionary. All in all, it's not too far-fetched to think that the marriage of blockchain technology and the banking sector could completely revolutionize the way in which day-to-day business transactions are facilitated by financial institutions across the globe. For example, the decentralized transaction frameworks can not only make a cross-border transaction cheaper, but also substantially improve on the transparency aspect. Bellendorf goes on to say that the digitalization of cash is a very different matter, and Alipay, WeChat Pay, and PayPal and Venmo have likely done far more to hasten the end of physical cash than any blockchain today or likely will over the next 10 years. However, he then proceeded to add that as convenient as these digital payment mediums may be, there are some drawbacks due to the underlying architecture. We should be very wary of giving up the anonymity that physical cash provides. What do you think? Comment below, like and subscribe. This has been the Ignorant Entrepreneur. I'm out.